We had this nice plan about earnings just kick off, but then, Scott, we got this inventory number, a record drawn inventory, 17 million barrels, and crude's down 2%. Exports were flying. Can you just help me understand the oil market right now?
Yeah, Alex, always great to see you, and it's probably one of the biggest draws we've seen. I know there's some weakness in gasoline demand. Hopefully, maybe it's because people aren't driving because of the heat. But I think what ABS is doing in Saudi with the additional cuts, July 1st of 1 million barrels a day, I expect them to continue those cuts through month through the end of the year. We should see some significant draws continue. And I stated today on the earnings call that Brent should trade between $80 and $100 the rest of this year and probably going into 2024.
All right, waiting for that 100, Scott, sooner rather than later?
By the end of the year, we should see it.
Okay, fair enough. All right, so now we got that part out of the way. Let's get to some of the earnings stuff, Rich, and maybe this helps shed some light on it. So the well productivity for Pioneer was a question for analysts, right? How well are these wells performing as they continue to get older? It looks like that issue might have resolved. Some analysts, though, are a little worried that the oil production is dropping a little bit, the wells are a little gassier. Can you walk me through that?
Sure. Well, pleasure to be here, Alex. Good to see you again. It really started that it was really an excellent quarter for the company. I mean, you're seeing the well productivity that's happening to our performance, and it really allows us to increase our total oil production for the year and our total production for the year. So both those are really a driver of this well productivity that we're seeing. And I really give a lot of credit to the team, great execution. And I think it's also a testament to our acreage position that we can do this for a long period of time. The other thing on earnings I'd say is, we are returning 75% of our free cash flow, which was nearly $750 million this quarter, back to shareholders in the form of base and variable dividends and share repurchases. That, base and variable is about a 3.3% yield on our stock and well above the S&P 500, as you know. As it relates to well productivity, it's really a function of us moving to full stack development, where we're developing all of our zones in one number of wells, and then we're drilling longer laterals. And so that's something that's unique to Pioneer, that we have over 1,000 long laterals that we can drill. These are over 15,000 feet. We drilled some this last quarter that were 18,000 feet, and the productivity on those is basically foot for foot matching what we're seeing on the 10,000 foot laterals. And so the combination of those things is really what's driving our well productivity.
Hey, fellas, nice to see you. It's Guy. Let's talk a little bit about what comes next. Rich, it sounds like you're inheriting a company that's in pretty good shape. You're going to be taking over shortly. How convinced are you that Scott Sheffield is really retiring this time?
He's told me numerous times, and so I'm very confident that he's retiring, but I know he's only a phone call away.
Yeah, well, is he going to? That's actually, that was my follow-up question. There's a depth of knowledge there. He's got a huge amount of experience. He's been doing it for a long time. As you take this company forward, this is a continuation process, right? He's only a phone call away. You guys have been working together for a long time. How does the company develop from here, Rich? As you think about where we're going forward, there's been a lot of rumors around Exxon and whether or not we're going to see Pioneer being taken out, whether or not you're a takeover target. Is that your view of the world right now? Or is the Rich Dealy view of the world is that Pioneer is on the front foot, that it is going forward, that it is the acquirer, that it is the consolidator? How do you see the model developing?
Yeah, well, first of all, I won't comment on the rumors and all of those items, other than to say that our board will do what's in the best interest of shareholders, whatever happens in the future. Our focus really is, given our depth of inventory, is advancing the company's strategy of developing that great inventory. We've got over 15,000 long, laterals included in that 15,000 that are high rate of return wells that we can, prosecute and develop over the next decade. So I think that's, where we look at. In terms of, how does Pioneer grow from here? It's the things that we've been doing. We continue to look at, adjacent acreage. We look at, trades that, improve our inventory by adding longer laterals. And so it's those little things that we're going to continue to do that's going to execute. But, really, our inventory is so good that it's a high bar to do any acquisitions and consolidation for ourselves. But we're going to still look in things that are contiguous to us.
Yeah.
But it's definitely a high bar, and we're focused on, executing the plan that we have in front of us and returning significant capital to shareholders. You saw on our our slides today at $80 over the next 5 years, we're going to generate $27 billion of free cash flow, a significant portion of that being returned to shareholders.
Hey, Scott, other oil companies, let's stay with Exxon for a second, they're talking a lot more about the Permian, and they're talking about lithium. Should oil companies become lithium companies, Scott?
I think you'll see companies diversify. In fact, we haven't talked about it much, but we produce lots of water, and we do have lithium in our water. So we got some experiments going on to look at mining some of the important minerals in our water, whether it's ammonia, whether it's lithium, or whether it's gold. And so there's some interesting projects going on in the Permian Basin, all based on the fact that we produce lots of water in the Permian Basin.
So I didn't expect you to answer that way, Scott. Do you feel like this is a byproduct of the IRA, that you'd be looking at water differently and what's in it, or would you be doing this anyway?
We were doing that anyway. We started the project 3 years ago. Okay. So even way before the IRA, even before Biden became president, we started this project. So it's the fact that we produce probably about 1.7 million barrels of water per day with our oil. And so if you look at the Permian Basin's producing well over 10 million barrels of water per day. And we're all trying to figure out how to increase profitability, including the water that we produce.
That's absolutely fascinating to think about how the chemistry works around that. Rich, we got the jobs number coming up on Friday. Let's just talk about what you're seeing. What kind of inflation rate are you experiencing right now? Is it coming down? What's happening with labor in particular as well? What's happening with wages? Just give us a kind of what's happening at the pointy end of this company. What are you having to do to get the stuff you need out of the ground?
Sure, Guy. No, great question. I'd say on the labor front, labor's been pretty sticky in West Texas. We just haven't seen the rig count come down that much in West Texas. We've seen that more in gas plays. And so labor wages have been quite sticky in West Texas. What we are seeing in terms of inflation is it is flattening, and we're not seeing the increases we saw in 2022 and early 2023. And we're seeing a few items decrease, mainly on the steel side of things. So our casing and our tubular goods, anything that's fuel related, we've seen some relief. Chemicals, we've seen some relief. So we're hopeful, and we've heard rumors of rigs and frac fleets, but the spot rates that we're hearing are mainly for what I'd call tier 2 frac equipment and lesser quality drilling rigs, where we're seeing lower rates. And when we look at those rates relative to just given our size and scale, our rates that we've contracted are well below those spot rates today. So nothing yet on that front, but maybe as we move into 2024, we'll see some relief there as well.
Interesting. I would have expected it to come down a lot faster, and that would also help the productivity issue too. Before we let you go, guys, we made fun of Scott really retiring. We say that because he retired once before and then came back as CEO. Scott, what are you going to do in the beginning of next year? When's your book coming out?
My book, okay. Well, first of all, it's important to realize I told the board, Alex, that I was going to come back for 3 years. So there was this little thing called COVID. And we made 2 large acquisitions, Parsley and Double Point in between. And so I stuck around 2 years longer. So Kim and I are moving back to Santa Fe. We're very involved in a charity for what's called First Serve New Mexico to help about 1,500 kids, Santa Fe children, teaching them tennis and lifetime skills. So that's where the focus is going to be.
That sounds like a worthy pursuit. Fellas, we really appreciate it. Scott, we're really looking forward to catching up with you again. We're not done with you just yet, so don't be a stranger. Rich Dealy, fantastic to catch up with you, sir. Looking forward to catching up with you again soon. We'll do it on a regular basis, we hope. Fellas, thank you very much indeed.